Hello everyone and welcome to the Trading Central B4X webinar. Today we will be analyzing what Trading Central is. We will be learning on how to use Trading Central to our own benefits, and we will move forward by showing you how to enter Trading Central through the platform. Now, first of all, Trading Central is a leading investment research provider to financial market professionals. Now, basically what Trading Central provides clients such as yourselves on how to open a position and how to close a position. Meaning on any position, you will see whether it's best to buy or to sell. If you're putting a stop loss, where to put it, at what rate, and where to put your what rate to put your take profit as well. Here, when you enter Trading Central, what you can do also, before we start opening any signals, today we will be opening 2 signals just to have an idea on how to use them. Alright, first of all, we will go on Web TV, alright? For those who are interested on what's going on in the market, all you will need to do is go on Web TV. Let's wait a bit till it loads. Now, Web TV provides you with the full New York clips, alright, clips about what's going on in the market. Alright, you can see all videos, you can see trader talk, what traders think, what traders expect. You can see every video on currencies, on energy, and so on. Alright, now normally you're getting for those who use MetaTrader platform, they're getting a user ID and password, as you can see here on the top. What they'll need to do is to enter their user ID that I am personally going to give them, and then they log in. Now, once you log in, remember that you're going to see something like this. Alright, you need to concentrate very much on the red section, which is the technical analysis. The yellow and the rest, alright, for alerts and candlesticks, keep it with only your broker, alright? What's most important are the technical analysis. Now, before you even start, alright, wherever you are, you need to customize your access. You can click on it here. So let's open it. Now that you customize your access, what you need to do is that you need to select the correct time zone. For example, where is my time zone? It's -5, which is Eastern Time and Canada. And then you click on Update. Now you will see that the profile has updated. You can go back to either Forex, which are currencies, stocks, or commodities. Let's go on currencies. I love currencies personally, so I would love to open 1 or 2 signals. Now, these signals, they raise your chances of making much more profit. How? They calculate exactly what's going on and what is going to happen as well. Alright? Here you have the ticker. The ticker is every symbol. The time, and remember, time is very important. Alright? The time, let's say for example, it's 3 p.m. in your place, and you want to open a position on a certain symbol and you need the signal, you need to verify that the signal has to be at the closest time to your time. Now, some signals update every half hour, sometimes it's updated every 15 minutes. Try to see the closest one. Now, what we're going to do, we're going to open two signals today. We're going to open right now two signals, and we are going to analyze them one after the other. So let's start by taking any signal here. Remember, the title also is very important. Alright, for example, US dollar JPY. We see that it's under pressure. Wherever you see it's under pressure, it's a good sign that it is very easy to make profit. Now that you clicked on US dollar JPY, you see something like that. All you need to do is to have a bigger image of the signal so that you can fully understand it. Here you have Trading Central, like that. The page opens up. All you needed to do is to click on the small box here, and the page is fully up. Alright. Let's do one signal. The first signal is US dollar JPY that was taken today at 1:25 a.m. Alright. Remember, it's very important to look at the date. Now, what is our pivot? Pivot means the maximum of our stop loss. How can we notice it on the graph? It's the blue line. Alright. The blue line. You cannot surpass the stop loss. Whenever you see pivot, remember that it means stop loss. Next, we have our preference and alternative scenario. Now, what exactly is our preference in and alternative scenario? Our preference is the calculated signal itself. And the alternative scenario means that that if by any chance the signal doesn't work, which is very rare, you use the alternative scenario. Now, remember something? Our preference, when you open a position through our preference, through the calculated signal, alright, you need to be very patient. Alright, even though you start with a small loss, you need to be very patient and you need to check it out and see on how and where will it go. Yesterday, I had a customer that opened a position on if I can remember quietly, it was the AUD JPY. We followed the signal. We started with a small loss, which was, for example, $5 to $10. And today he made about, if I can remember, it would be $15 and a few cents. All right. So imagine if we invested a larger amount of money to the position we open thanks to the signal. All right. Now the alternative scenario, it simply means that there is sometimes that the market, all right, it's very rare that the market will go against the signal that was calculated, and therefore you will use the alternative scenario. The alternative scenario gives you the opportunity to open the complete opposite of the preference, so that one way or the other you can avoid having losses and you can boost your chances of making profits. So you have a first position and you have the upside position. Now, for the alternative scenario, what you can do is, by following up with your financial advisor, you can put a pending order at a certain rate, so that when market reaches at a certain point, you can open an opposite position automatically. This, I would prefer that you question your financial advisor about it, and he will explain to you everything. Now, here you see that I enter Trading Central. I opened my signal, and I'll do it again. Alright, we will open the second signal. I will show you also the platform. I will basically show you everything twice today. Now, our preference. Let's look at our preference. Short position. Now, every time that you see short, it simply means that you need to sell. Meaning that compared to the US dollar JPY, alright, the US dollar is getting weaker. Therefore, you will need to sell. So, whenever you see short, it means to sell. Whenever you see long, it means to buy. So, short position, we're selling the position below 79.6, which is the pivot, which is the stop loss. So, anywhere below, 79.6 should be your stop loss. You cannot put any stop loss above 79.6. With targets, now every time that you see target, it simply means take profit. So with targets, with take profits of 79.3 and 79.2. So the take profit is very, 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 very little, but still, it can reach a maximum because at the moment it's getting very volatile, and we could expect a rebound on the signal, on the market. Now the alternative scenario. The upside penetration of 79.6 will call for 79.85 and 80. What will happen is that if by any chance this calculated signal, the market doesn't go as the signal predicted, it's going to go up. When it goes up, you have your second position that you need to open, which is on buy. You're going to buy the position, and your stop loss will never be above 79.6. It has to be at 79.6 or maybe a bit below. And then you will see that the upside penetration of 79.6 will call for 79.85 and 80. So your 79.85 and 80 will be your take profit. Now, to show just a rule on the graph, whenever you see that the arrow is going downwards, it means that you will need to sell, and your take profit will be the red lines. Whenever you see that the arrow is going up, it means that you will need to buy, and your take profits will be the green lines. Remember, arrow going down, sell, arrow going up, buy. Arrow going down, take profit is your red lines. Arrow going upwards, take profit are the green lines. Alright, now let's close the signal. Alright, again I'm going to show you on how to enter Trading Central. Alright, when you enter Trading Central, you will need to put your username and your password that I will be sending you. You select a ticker from the technical analysis only. Here you will have the ticker. The time, again, is very, very, very important. The title, look at all titles. See what's under pressure. See if there's a rebound expected, etc. Here we see the US dollar, Canadian dollar at 1:13 a.m. Let's click on it. You will see a page opening up for you like that. You will click on the small box here to have a bigger view. Normally this is to print. Now the US dollar, Canadian dollar, see it was taken at today at 1:13 a.m. Remember, a.m. The pivot is the maximum of stop loss. Our preference, short position, again on the sell section. Below the stop loss, which is 1.027, which is the blue line. with targets. What are targets? Targets are take profits of the two red lines. All right. Whenever you're putting a rate of the take profit, make sure that it's between the two red lines. All right. Now, if you can see, since this certain market is very volatile, you can check it out, and you can see that at a certain point it was very downwards, and on a certain point it was I would say 2 days ago it went very high, and now it's going down. So you can be sure that this signal will still go down for a bit more before it goes up again. Alright, now we have the alternative scenario. Now let's try to open the alternative scenario, create the alternative scenario without even looking at the alternative scenario. Now we see that the market is going down. Alright, let's learn on how to analyze and how to predict what could happen next. When you see that the market here is getting weaker, and there's a slight possibility that it might go up again. So what you need to do is that, since you saw that there's a stop loss here, you will be opening a position on buy, not to put a stop loss higher than the stop loss here, the blue line, a bit lower, a bit below, never above, and your take profits will be only between the green lines, the rate between the green lines. Now I see that the arrow is going downwards. I see that normally what we need to do is to sell, and our take profits will be between the red lines. Now let's close it, and let's see on how we can provide Trading Central through the platform. Now let's open the platform. Alright. Now, let's take this off. Alright, as you can see, you have your platform in front of you. And I would be concentrated on only the quotes. On the left side you see the box view, and on the right side you see a list view of all the symbols. Now, next to every symbol on the left side, you see that there's a small white square. You click on the square on any symbol that you prefer. So let's say I'm very interested on the Euro USD. I click on the square, and I will have a page opening up for me with the signal already opened, as you can see here. Now, normally to get Trading Central, the market signals, all you need to do is to send me an email. I'll explain what to do in order to receive Trading Central. What you need to do, normally there's a certain amount of deposit that you will need to make to get a certain amount of time of access, but I will do my best so that you can take as much advantage as you can on Trading Central. Alright, so just send me an email on adam.wahlberg@bforex.com, and I will take care of the rest. Alright. Aside from that, thank you very much for coming to the webinar, and have a wonderful day. Bye-bye. Soldi, capo di tutti, scongelato.